Let's start off with your overall analysis of the markets at the moment.
Hi, Alicia. Generally, the market seems to be trading sideways. Significant lack of direction is what we can say we've been noticing in the market. But what I think has been standing out is that the market has been reacting to some of the results that have been released. If you look at the banking sector, with all the negative numbers coming out of the banks, there still seems to be a clear dichotomy in terms of the sector, with investors looking favorably at the banks that came out clean from the CBN round of audits, and the banks that came out on the other side, suffering significant stock losses. But I think what we're going to start seeing, especially from the banks that have lost significant value in the last 2-3 months, is that there's some form of bargain hunting would start to flow into the market, and that would actually drive economic activity going forward. However, when you look at the real sector, so when you start to look at the breweries, the food and beverage sector, I believe that those are the sectors that will create opportunities for investors in the short to medium term. Short to medium term in my description right now will be saying till the first second week of January 2010.
Well, Femi, it's certainly been highlighted through the slew of numbers we've seen out of the consumer goods market just this week. I mean, quite a few of those companies in this space were out with numbers, Dangote Sugar, one of them. What's your view on that counter at the moment, where we have seen this share price really remain steady throughout the market decline?
I think, look, it's a normal thing to happen in a bear market, where everyone goes defensive, and the defensive sectors in the Nigerian stock market would be your breweries, your food and beverage sector. Interestingly, the pharmaceutical sector hasn't been that pronounced from being a defensive sector in Nigeria, but in most of the markets, pharmaceuticals would be defensive, and that's what we've seen in the performance of the stock market. Stocks like Dangote Sugar, Unilever, PZ, your Nigerian Breweries, Guinness provide long-term support for investors, especially in down periods, because you believe that these consumables would always find favor in terms of consumers' balance sheets. But the key upside for a number of these stocks as well is that there are a few what I would describe as cost enhancements that they've done. So most of these guys have tried to cut fat during the lean period, and that's beginning to filter into the numbers. We're seeing margins improve, sometimes even significantly across board, and that's what I see driving the market going forward.
That doesn't mean that there's not work to be done. I mean, if we have to use Dangote Sugar as an example, I mean, this is in an environment where we've seen a lot of the sugar players on the continent jump on the ethanol production bandwagon as a revenue source moving forward. We've certainly seen Mumia Sugar over in Kenya attempt to go down that road. What are the prospects of Dangote Sugar exploring that option moving forward?
I think that for Dangote, there's still quite a lot that the business itself needs to do to get to the point where it starts to support an ethanol business. Don't forget that Dangote doesn't have the biggest sugarcane plantation in Nigeria. For you to be able to actually start to look at ethanol and the other byproducts, then it must mean that you've got a significant source of raw materials, probably your own farm. And I think that that's what Dangote is placing efforts doing right now, to say, look, let's grow our farms, let's increase our supply from an internal point of view, then we can use ethanol as a byproduct of our sugar. But what is key is that the rest of Africa and the rest of the world is actually shown the line in the direction in which people like companies like Dangote should be looking at. And I believe that the management will place some emphasis on growing its supply, its own internal supply sources, and using that as byproducts for other, obviously, commercially viable products going forward.
Well, we're going to bring Dexter Mahachi of Securities Africa into this discussion at this point. I mean, Dexter, we've been talking with Femi thus far about the allure that the consumer goods segment presents in an environment where the banking sector is still surrounded by a lot of uncertainty. We've had Femi highlighting just some of the counters. Let's look at PZ Cussons and Unilever Nigeria. I mean, these are companies that are competing head to head. Which in your books presents the better investment case at this stage?
I think there's actually a case for both. There's no need for investors to preclude themselves from either of those counters by just selecting one. This is because of the fact that because of Nigeria's population, the scope for growth for both of the countries is quite large indeed, and the profitability indeed bears out that the same sentiments. If you look at Unilever's third quarter results, they were pretty impressive. We had a situation whereby the profit after tax grew up by almost 128%, and that, in my view, actually illustrates the type of growth and opportunities that there are in the consumer goods sectors of Nigeria. Yeah.
At the same time, I mean, Nigerian breweries as well. One of the counters, excuse me, that's really been, attracting attention of late. We've noticed that it's planning on expanding its production capacity moving forward. And really what's interesting here is that this is in a context where SAB Miller is rolling up its sleeves for a fight in that region as well. We've heard rumblings of SAB Miller setting up shop in northwestern Nigeria. What have you made of that, and how do you see that competitive landscape shifting, where at the moment it's Nigerian Breweries and Guinness that are really dominating things?
I think for the medium term, it's quite plain to see that Nigerian breweries and Guinness are going to continue to be the most dominant players in the sector. But certainly, we can't rule out any M&A activity in the future on the side of SAB Miller, because clearly the type of profits that you can get from the consumer sector in Nigeria are large enough to attract new players such as SAB Miller. And going forward, we might, if we look in the long term, maybe we might start to see a situation whereby the competitive landscape might change. But in the interim, I think Nigerian breweries and Guinness are going to continue to be the most dominant players there.
Let's get Femi's view on that. I mean, Femi, the fact that the brewery space is attracting new companies has got to be a good sign that we've seen new entrants. Are you seeing the viability of Nigeria Breweries and Guinness and their ability to actually compete against the likes of a player like SAB Miller?
You know, interestingly, I actually completely agree with Dexter. The reality is that Nigerian Breweries and Guinness are pretty entrenched in the local market, and their brands create an unbelievable loyalty from the locals. But what I see happening is an SAB Miller coming into the Nigerian market, playing at the regional level, in specific markets, and ultimately looking for some level of M&A activity. You can't come into the Nigerian market and expect people to stop drinking their Star or their Gouda. It's just not likely to happen. But what you're able to do is bring in new brands, expand the brand network, and see how you can consolidate your business with some of these established players. If I was advising SAB Miller, that's the route I'll be telling them to go through.